Welcome to the Executive Real Estate Investing Show. This podcast is for you, the busy business owner or executive looking to create generational wealth. Here, we're going to show you how to do that through real estate investing, from multifamily to industrial and everything in between. You will become a real estate investing expert. And now, here's your host, Michael Holman.
Hello, everyone, and welcome to another episode of the Executive Real Estate Investing Show. I'm your host, Michael Holman. Super excited to have you with us today. Super excited about the brand new year 2022 rolling in. 2021 was fantastic, amazing, a lot of great things happening. 2022, here's to hoping it's even better for everyone. So I hope everyone had a good holiday season. I hope New Year's was great. I hope everyone's got their goals set and ready to go and pushing forward. And today we got a very special episode because you want to know what I am going to go through 5 real estate investing tips to help you in your investing journey in 2022. So really excited about this one. If you haven't subscribed yet, go ahead, go to the subscribe button, hit that subscribe button. We want to hear from you, right? And so also leave us a rating, leave us a review. We love to get those all the time. And lastly, executivereishow.com. It's amazing. There's tons of good content on there. You can download the newsletter. You can ask executive questions. Those are the questions that I answer about once a month, once every other month on a special episode. So you can get your questions answered directly by me by submitting those questions. Really fun to do that. So executivereishow.com. And as always, we are going to start off today with an executive tip. And today's executive tip is keep it simple. Right? Sometimes we make things out to be so much more difficult, so much more complex than what they actually are or what they actually need to be. And real estate investing, in the broad term, is a simple process, right? And honestly, most businesses, most everything that we do can be broken down into very simple processes. And with that, I'm going to keep this executive tip simple and get right in to these 5 tips for kicking off your 2022 investing journey. Let's get into it. Hello everyone, this is Michael Holman. I just got to take a quick second and tell everyone about this exciting news that we have coming up here at the Executive Real Estate Investing Show and at my company, Overland Group, Inc. We are in process of creating one of the most mind-blowing real estate trend analysis reports that has ever been created, right? And it's going to draw on all sorts of reports. It's going to take my knowledge, and guess what? We're going to give it away absolutely free to you, to your friends, to your grandma, to anybody who wants it, right? It's coming out in the next couple months. Be on the lookout, right? It's going to be at overlandgroupinc.com and overlandcapitalcorp.com. You can find it on both places. I'll even have a link to it from the executivereishow.com. But this is going to be amazing. It's going to give you so much information on where we're at in the real estate market and where things look to be going in 2022. And like I said, that's coming out and going to be rolling out over the next couple months. Be on the lookout. I'm going to give you more updates. But I just want to make sure that you know it's coming and we're excited to give it to you. Thanks, everyone. Getting right into our 5 tips for the day. Tip number 1. The only way to get in the game is get off the sideline. All right? I kind of have to laugh because this is the most common theme. I mean, every single time I bring a guest onto the show, I ask them 2 questions. And that second question, what real estate investing advice would you give other business owners and other executives? And time again, they say the same thing. Sometimes they say it in different ways, but they often say the same thing. And that's take action, right? That's get in the game. You cannot benefit from real estate investing if you're not doing it, right? You have to find a way to get in, to the game. Get off of the sidelines, right? You're not going to know everything when you try and get started. You're just not, right? I mean, I openly admit I've been doing this for quite a number of years, right? And I've done hundreds of millions of development and transactions, and I readily admit that I still don't know everything. I mean, there's a lot of things that I still have to learn. But guess what? It doesn't stop me from doing it. It doesn't stop me from continuing to invest, from continuing to try and fill my financial dreams and goals, and you can too, right? The biggest thing to understand with all of this, right, is you have to just get started. And there's a myriad of ways to get started, right? But you have to find your way and how you're going to do it. So tip number 1 for the new year, get in the game, right? Get off the sideline and get in the game and find a way to do it. And keep listening, because we're going to help you explore different ways to get in the game if you aren't already. But we're going to have some future episodes that are going to do that. Tip number 2. And this is a big one that I don't necessarily focus on a lot or as much as I feel like I should, right? And that is, you need to take some time to understand the tax advantages of real estate, right? I mean, and it's funny that I say I don't take as much time talking about this as I should, because I'm a CPA by trade. That's what I did prior to real estate. But it's true. You have to take some time to understand the tax benefits. And my one disclaimer, right? I'm going to talk about some things here. Talk to your CPA or talk to your tax attorney, whoever you got to, before you make any decisions. But that being said, right, real estate investing really is more than just the return that you see, right? Everybody posts a return, all these sponsors, right? 15% IRR, 16, 20, whatever IRR they have. Well, that's great. But the thing to understand is that return doesn't necessarily incorporate the tax benefits that you personally are going to receive. I mean, just think about it. Tax is the number one biggest expense in most of our lives, right? I mean, it takes anywhere between, 10, 15 to 30, 40% of your annual income. I mean, let's just take 30% of your annual income, right? You make $200,000 a year. That means that the government is taking $60,000 a year, using that example. And that all depends on, everything that's going on in your life, but $60,000, right? That is generally the number one single largest expense or detractor of net worth and net worth building of anything in our lives, right? And so you have got to take some time and understand these tax benefits. And I want to go through just a couple, right? The tax benefits of investing in real estate is that depreciation versus cash flow, right? The beautiful part, you can have in real estate, thanks to depreciation, thanks to interest, all these different things, you can have potentially a net income or at least a lower net income and still be getting cash, right? So when you go to report your taxes, you get a document from a CPA that says, yeah, we lost money this year. Don't have to pay any taxes if you lose money. Well, guess what? Cash is still going into your bank account. All right? What could be better than that, right? I mean, it's tax-free money, essentially. And like I said, I'm taking it to the extremes. It doesn't always work like this. It doesn't always end up that you're negative on one side and positive on your cash flow, right? Like, that doesn't always happen, but it happens a lot, right? In general, your net income, or what you report to the IRS, is almost always lower than what your cash is that you get, because you have these non-cash expenses that the IRS says, yeah, that's an expense that counts against your net income and what you have to pay in taxes, right? But it's a non-cash expense. Really, really cool stuff in real estate investing that you don't necessarily get in a lot of other industries, okay? A couple of other tax benefits and things to just look into, is 1031 exchanges, right? I mean, if you're interested in taking your 1031 exchange and investing it into a syndication, then I highly recommend go back, listen to episode 14 and watch episode 14. Go to YouTube and watch it, because I actually draw out exactly what has to happen for that to happen. But 1031 exchanges, right? If you have a property and you're coming out of that property, you sell it, you buy another property, tax-free, you can literally build a small fortune over a number of years deferring taxes time and time and time again. And this is a hot topic. I mean, this is something that everybody's been talking about. Everybody's been wondering, is our 1031 exchanges going to go away eventually or not go away? The answer that I have is I don't know, right? It's extreme. Could they? Yes. Are they going to? Probably not. I really don't think anything's going to change in the immediate future. But, I don't have a crystal ball. But 1031 exchanges can be huge wealth builders, right? And depending on the type of investment and the type of real estate that you have, those could be really beneficial. But like I said, I just want to reiterate, if you are interested in investing your 1031 exchange money into a syndication, go back, watch episode 14, teach you how to do it. I'm going to give you all the tips there. And because it's honestly, it's a little messy, it's a little more complex, and a lot of sponsors just don't do it. They just flat out, it's not worth it, right? I'm not going to do it. But go check that episode out. You'll understand how that all works. One of the other tax benefits to talk about is you can invest through a self-directed IRA or 401k, right? This is another thing that I haven't talked about a lot, but it's so powerful. I mean, think of if you had a self-directed Roth IRA, right? You'd already paid the tax. You had, $1 million sitting in there, and you're thinking, I'm ready to make some investments, right? I want to make some real estate investments. Well, within that, you can make a real estate investment, which has exponentially more potential and over the long history has significantly higher returns than, say, the stock market. You can invest money into real estate tax-free through that process, right? Through your self-directed Roth IRA or self-directed 401k or whatever self-directed retirement account you have. That is super powerful, right? I mean, that can make a huge, huge difference. Already having paying taxes and just getting that wealth building going, right? It's all about getting that wealth building to build the momentum. And that is a great way to do it and a great way to invest in real estate. Last thing that I just want to touch on, there's a number of real estate professionals that listen to this show, right? Real estate agents, brokers, mortgage, investors, that are counted as real estate professionals per the IRS. And it's an IRS definition. Well, one of the cool things is if you are a real estate professional, you can potentially charge your passive losses towards active income, right? Just reducing your tax liability even more. And so all of these things that I'm talking about, right? These are things that don't necessarily show up in returns. These are things that don't get highlighted enough about real estate, right? Even people who are freaking out about the stock market, oh yeah, 2021 was a great year and everything went up and all these good things are happening. Like, yes, I agree. But they're only looking at one aspect of this investment, and that's the returns, right? The returns, yeah, they're important, but there's a lot of other benefits to real estate investing, like these tax benefits that you need to understand, right? So that is my second tip for getting 2022 started right, and that is take some time, understand the tax advantages of real estate investing. Tip number 3, and this is probably my most important one. And that is flexibility is going to be key in the coming months and years. Right? And people often ask, well, why would I say that? I'm saying that because you're going to have to be willing to potentially pivot in 2022. Right? I mean, let's just take a step back, broad economy. The US economy is a boom and bust economy. It just is. And even though we've inflated it and we've done all these things to try and stop it from busting, right? I don't know if it's in 1 year, 10 years, 20 years, right? It's going to bust. It always does. And that is the way that the market is set up. And so that might mean that there could be a recession. I mean, just honest truth, right? Nobody really wants to talk about it or address it, but could there be a recession in 2 years? Yeah. Could there be a recession in 1 year? Yeah. Well, how is that going to affect real estate investing? And what I have to say is real estate investing has always fared very well. Now, you wouldn't sell all your assets immediately following a market crash, right? And this is where flexibility comes in. You might have to be more flexible on time frames, right? Maybe your hold period was estimated to be at 5 years and you're supposed to sell in 2022. Well, if a crash were to happen, right, or whatever the case may be, the worst thing you could do is sell it immediately, because the market almost always dips and takes a really big dip and then it comes back, right? I mean, you can even look at 2008 and 2009. Yeah, it took a huge dip. Everyone's freaking out. 30-40% loss in value in my real estate. Well, if people just held on to it a couple years, right? Even in some of the worst markets, right? By 2015, 2016, it was back up where it needed to be, right? So be flexible, right? The more flexibility you can show in your real estate investing, the better off you're going to be to make good decisions, right? Decisions that are going to help you build that net worth even more. You know, it might even include, hey, you might be saying, hey, I only do, 5-year holds or 3-year holds or whatever the case may be. Well, you might want to start looking at some 10-year holds, right? The reason being is because then you're diversifying some of that risk, right? If you have some assets that are supposed to sell in a short term, you can take and mitigate that risk or spread that risk out by taking some assets and saying, hey, I'm going to start doing some 10-year holds. That is just one of the points that I'm making here in this section of being flexible, right? Another thing that a lot of people are approaching, I mean, people are calling me all the time right now. And the reason being is because they feel like buying existing real estate doesn't make sense, right? I mean, let's just take apartments, for example. I mean, people are buying apartments at $400,000, $500,000 a unit. And people are just going, I don't know how this is making sense, but I'm still doing it. Well, maybe now's the time to look at development, right? Maybe potentially look to pivot into some of the development. And I have a bunch of thoughts on getting started in development, but whether it's you getting started in development, whether it's you investing with somebody who's an expert at doing development, whether it's you partnering with somebody who does development, whatever the case may be, these are the type of things that we need to look to as we're approaching 2022, because there's different things happening, right? If you've been investing in passively in value add multifamily for 5 years, and you've never done anything else, and you said that's the only thing I'm going to do, well, great. If you want to keep going on that, that's fine. But I would recommend just looking and be flexible, right? I'm not saying change your investment strategy completely, but just understand that a precarious market calls for more flexibility. And the people who are going to fare best through the next 1, 2, 3, 4, 5, 10, 20 years are those who have the most flexibility in what they're doing. They don't have to sell the second that the market crashes to the bottom, right? They don't have to buy at the very top. But these are the things that are that institutional level investors are looking at and are understanding, right? The best investors in the world understand that there's a time and place for everything, right? And it's not necessarily about what you're doing as much as it is when you're doing it, how you're doing it, right? These are all the important things. And so be flexible as you're going into 2022, right? That is going to help you immensely. And one of the most amazing and freeing parts of being flexible, guess what? It takes all of this worry and stress of, oh, is a recession going to happen? Oh, is the market going to crash? It almost takes it away. Because if you're going into things saying, I'm flexible, if this needs to be a 10-year hold and I said a 5-year hold, but it's the best thing to do. If you are being flexible, then you can ride out whatever market conditions may exist at whatever time, right? That's where the flexibility is really powerful. And that's where it becomes freeing, because one of the things, right, like going back to tip number 1, one of the most common reasons that I hear people say, I'm not going to get invested in real estate. Well, it's at the top of the market, right? We're at the top. We're 100% at the top. Well, guess what? People have been saying that. I have been hearing that phrase since the beginning of 2016. So here we are, essentially 5 years later in 2022, And people are still saying the same thing, right? I heard it time and time again, right? People in my own neighborhood, other real estate investors, we're at the top of the market. I'm not buying. Why? Because it's not cheap. Okay, that's fine. Well, that mindset has paralyzed some people, right? Don't be stuck in there. And being willing and understanding that there's flexibility involved in real estate investing, man, that is going to free you up and relax your mind so much to be able to get started. Because all of a sudden, you don't have to worry about what's going to happen in 1 year, Oh, I got to time the market crash. I got to time when this downturn is going to happen. And I got to time it down to the day, right? It's like, it's going to be, March 4th, 2025. And that's, I have to time everything perfect. You're not worrying about that, right? That it gives you the ability to say, you know what? I know real estate is generally goes up, right? And I'm not saying it always goes up. Definitely a fallacy. But if you look at the long run, right, just big picture here, real estate goes up. It always has been trending upwards. And nobody expects it to start trending downwards over an extended period of time. Is there times when it dips? Absolutely. 100%, no questions asked. But if you were to zoom out, big picture, it's generally going up. So that is why I say, number 3, be flexible, because it is going, right? There's a lot of questions that are arising from real estate investors right now. And the more flexibility you have and can show, the better off you're going to be. Tip number 4. And this one comes from talking to a lot of real estate investors and real estate sponsors. And that's do your due diligence on the sponsor, right? I've harped on this time and time again, but I am going to just say it again because it's probably one of the top, it's obviously the top 5. That's why it's in my list, but it is one of the most important things you can do as a passive investor, right? People are always wondering, well, how do I analyze a deal? Well, I always tell them, look, take a step back, because if you're investing passively, right, you're putting your money with a sponsor. You can do all your due diligence that you want, but you are never going to be able to do as much due diligence or have as much knowledge as that sponsor. So wouldn't you be better off taking the time to know and understand that sponsor and do your due diligence on the sponsor so that you can feel like you can either trust or not trust everything that he or she is telling you, right? Don't be afraid to ask the hard questions, right? Ask difficult questions. I tell people all the time, right? Ask your sponsors, what's the time that you failed, right? What did you do? How'd you react? Or what's an investment that it's not performing as well as you want it to? You can ask them the good questions too, but guess what? Real estate investing isn't a science, and it's not perfect. And no sponsor is perfect, right? If you find somebody who claims that they're perfect, that is completely untrue, and I'm telling you, stay away from them right now, right? Things don't always go out exactly as expected, right? But the most important thing you can do is find a sponsor that you feel that you can trust, right? That their vision aligns with your values and what you want, and you can get behind them. And that is super, super valuable, right? So the more you spend your time doing your due diligence on sponsors, the better, right? That is going to save you a crazy amount of time and energy on your passive investments. All right, we are down to the last and final tip. And I'm really excited about this one. And it kind of wraps everything that we've talked about together. And tip number 5, don't fear failure. Say it time and time and time again, right? Every successful real estate investor has had a moment when they failed, when they struck out. Whether it's a passive investment, whether it's an active investment, it doesn't matter. Every successful real estate investor on planet Earth has failed at some point, at something. So guess what? if your first investment doesn't turn out how you wanted it, that's fine. That's not necessarily the reason to quit, right? If you have an investment that goes south with the sponsor, maybe you need to pivot sponsors depending on what's going on, but that doesn't mean you jump out of the game, you jump off the boat, right? One failure does not mean the end of the world, right? It just reminds me, one of my favorite quotes, right? It's that FDR, Franklin Roosevelt quote, we have nothing to fear but fear itself, right? And it's so true, right? If you fail one time, get up, do it again, right? Real estate investing it's not a perfect science, like I said. It's not, but it is, the rewards are immense, right? You can honestly, I know of no other wealth building tool that works as well and has been as consistent as real estate. I just don't. I have explored countless investments. I've been invested in stocks. I've been invested in bonds. I've been invested in cryptocurrency. I've been invested in real estate. I've been invested in private equity. All of these things that you can look at as investments. And I'll say it again. Don't be scared to fail. Don't be scared to not perform as well as you wanted to, right? Because guess what? I'll say it again. I know of no other tool for wealth building that has been more consistent than real estate. So guess what? It's time to get off the sidelines, get into the game, understand those tax benefits of real estate investing, be flexible in your investments going forward because it's going to free your mind. And guess what? It's going to help you make more money. Do your due diligence on your sponsors. And last but not least, don't fear failure. Let's go take on 2022 together. I'm excited to have you join me on this show. Let's go.
Thank you for listening to the Executive Real Estate Investing Show. Ready to learn more? Go to executivereishow.com for more episodes and resources to help you create generational wealth through real estate investing. That's executivereishow.com.